You're watching The Week Ahead on Dukascopy TV. I'm Sophia Aribo. With me to discuss his views on what to expect over the next 7 days is Absa Investments' Chris Gilmour. Chris, Wednesday sees the Bank of Japan's interest rate decision. What do you see happening?
All major central banks globally are deciding on interest rates this week, and the consensus view is that pretty much rates are going to stay on hold. If you look at Japanese Q1 growth, it was actually quite strong, but I think it masked a number of things. I think second quarter growth is likely to decline quite considerably, particularly in the wake of the recent VAT hike. And the Tankan survey, which we got in May, I think confirms this. So our base case scenario is that the Bank of Japan will ease in July, but not in May. And the extent of such easing isn't known at this point in time. And I think finally, to really endorse this point, Japanese banks are warning of lower profits, which may also prompt a cut.
UK GDP figures are out on Friday. The last set showed strong growth. Do you think we'll see the same this time? And if so, what are the implications?
I think we're likely to see a further encouraging bit of momentum on UK GDP growth. We've had a good time on the GDP front recently, with the IMF upgrading its forecast from 1.5 to 2.9% for the year as a whole. But recently, Mark Carney, the governor of the BOE, came out warning that there was a looming housing bubble there. And that may not help matters. It may just persuade the authorities to start tightening a bit. Having said that, our base case is that we're not going to see any tightening until the second quarter of 2015 at the earliest. And I think we also have to look at housing being a lack of housing stock rather than being this massive demand in there. Obviously, the two are related. But I think they're going to have to sit back and watch and see what happens with GDP growth, and particularly with an improving labour market, to see what happens on that front. I think but on balance, we would tend to look for an improving situation as far as UK GDP growth is concerned.
New home sales data for the US is also out on Friday. Fed Chair Janet Yellen told US Congress the recent flattening of housing activity could prove more protracted than expected. Do you see the stats supporting this view?
Funnily enough, if you actually dig deeper into the housing starts figure that came out at the end of last week, you'll see that they actually rose quite sharply by 13.2% month on month to just under 1.1 million units. That's from 947,000 in March. And then we were looking for about 990,000 against a consensus of 980,000. So I think it was actually better than most people expected. And the main thing here was multi-family starts. That was a big driver, up 39.6%, admittedly from a low base in March, when we thought it was going to be an awful lot better than it actually turned out to be in March. Single-family permits, that's the big part of it. That only rose modestly, very much in line with other economic activity, things like auto sales, for example, which rebounded after a very slow start, pretty much weather-related, I think. So I think this report, in fact, if you analyze it carefully, should help to calm fears that housing activity is in fact flattening out. I think it's gradually recovering after a couple of shocks that we had last year with higher mortgage rates and more recently with weather-related activity. So I'm not too discouraged at all. In fact, quite the contrary.
Thank you, Chris. Stay with Dukascopy TV throughout the week for more in-depth interviews on all these events. Bye for now.